Final 2 hours of the weekly options expiry. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. The Bulls are looking to find their voice back. The one who has found his voice back is Vivek Iyer, who's joining with me in the studios. Vivek, good afternoon.
Good afternoon, Hormuz. And like the mid-cap and small-cap end of the market, slowly and steadily finding the voice back. As always, we have quite a lot lined up on the show. Let's start off with the top headlines. Advancing stocks outstrip declines as indices gain after Trump moves to ease auto agri tariffs. Mid-caps trade in line while banks are relative underperformers.
Chennai Petro and MRPL along with all other oil marketing companies have surged on falling crude prices. Brent is now down below $70 a barrel.
REC management tells CNBC-TV18 that they expect recovery to be more than 100%, as disbursements will surge 18 to 20% on a year-on-year basis in FY25.
Gensol Engineering continues to remain in a 10% lower circuit over concerns in delays in debt servicing, and this despite the management telling CNBC-TV18 that they did not fabricate any documents. There was a default on debt payments, but the promoter, the chairman and MD, hopes for a rating upgrade in the next 3 months. Also says that the promoters will soon buy shares from the market or convert warrants. Moving back to the highest point of the day is the index, now just 30 points away from that. 22,465 is where the Nifty currently is, 130 points higher on the index, nearing the day's high of 22,500. And the oil marketing companies, the oil sensitives, they are the stars of today's trading session, be it Chennai Petro, be it MRPL, HPCL, Indian Oil. All of them seeing very, very healthy gains in today's trading session. Chennai Petro, the top gainer on the Nifty 500 at 11% higher now. And good going for all of these oil sensitives. And even the paint companies like Asian Paints is up almost 3.5% in today's trading session. But there are plenty of movers in the broader markets today. And Vamakshi is here to list out all of them. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, plenty of movers out there in the broader markets. The advance decline ratio broadly in favor of the advances. And let's look at some of the stocks that are gaining in today's trading session. Castrol India is one such name. In fact, the stock is seeing the biggest intraday gain since July. And this is after reports are suggesting a bid by Saudi Aramco. The stock is up nearly 11%. Chennai Petro is another counter, gaining on the back of a fall in crude prices, up nearly 11% as well. Credit Axis Grameen has gained momentum throughout the trading session, up nearly 9.9%. Sapphire Foods is another counter that is up nearly 6% today. Apart from that, the industrial pack as a whole has been a buzz. Keep in mind their valuations had corrected very recently over the last couple of months. And since then, when we look at Jyoti CNC, that stock is surging by almost 8.5%. Triveni Turbine 2 is recovering, up nearly 7.8%. Hitachi Energy as well as Cummins, both of these counters are also flying away in trade today. Apart from that, let's also focus in on some metal names. Keep in mind that a few metal stocks were in focus yesterday as well, and they continue to be in focus today. Jindal Stainless being one such name, up nearly 6%. Ratnamani Metals up nearly 4.5%. NMDC and Hindustan Copper are also some other stocks that are moving in trade today. On the flip side, let's look at some stocks that are losing out in an overall strong market. Craftsman Automation up down nearly 3%. We also have JB Chem and Pharma trading close to the day's lowest point, down nearly 2.5%. Bharti Hexacom flip-flopping in trade as of now, down nearly 2.6%, and Anand Rathi continues to be under pressure, down nearly 2%. Lastly, let's focus in on some stocks that are moving on the back of very strong volumes. This list includes MRPL up 6%, NLC India, Route Mobile, as well as Varroc Engineering.
Thank you so much, Vamakshi, for joining us and giving us a sense of what exactly is happening as far as the broader end of the markets are concerned. Let's now welcome Vinay Rajani from HDFC Securities for a technical check on the market. Good afternoon, Vinay. Thank you so much for joining us. Last 2 hours left. Where do you see, the Nifty weekly expiry panning out?
Good afternoon and thanks for having me on the show. So yes, for last 2 days, pullback has been nice and it is sustaining. And after a long time, we have seen that Nifty has closed below 5 days exponential moving average. So that has happened after 1 month. So yesterday's close was quite convincing. Today, follow buying is also there. And FIs are still holding their in index future. They are still holding more than 80% position in the short side. So yes, the way market is sustaining, it looks like that the short covering from the FI side will come in the index future in the hours to come and in the days to come. But yes, the bias is bullish. Overall, I feel that Nifty should close about 22,500 in today's expiry session. And overall, I feel that the Nifty is headed for the next target of 22,800. So bias is bullish. Dip should be bought into. The kind of indicators which were oversold previously. After a long time, you've seen that extreme case on the lower side. So yes, the recovery was due, and that now it is coming, and gradually we are getting more confirmation. So we are bullish here, and we feel that 22,300 is a strong support for the short term. Ultimately, we are targeting 22,800, and for today, we are expecting Nifty to close about 22,500 in rest of the hours.
Big stocks, Vinay.
Yeah, sure. So basically, some of the PSU stocks started giving good breakouts on the chart. So one of the stock is NTPC, which is looking extremely strong. The stock has surpassed the previous swing high as well as the 50 days EMA. So that is looking good on the chart. So 333 is the price. One can go long around here. 325 should be the stop loss, and we are expecting it to go up to 350. The next stock is from the metal space, JSW Steel. It is the strongest technical setup from the metal space, so looking strong. It is trading at 1011. One can buy here. Stop loss can be kept at 985. On the higher side, we are targeting around 1050 for next 2 to 3 trading sessions.
Thank you for joining in, Vinay, with your views on the index and on specific stocks as well. We take a short break, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away. The CNBC-TV18's all-new app, which gets you instant access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app from the Apple Store, the Google Play Store, or even scan the QR code that comes up on your screen in just a bit. There you go. That's the QR code. Take a short break. Up next, we'll be joined by CS Vigneshwar, the president of the Federation of Automobile Dealers Association, to talk about the trends in the automobile sector. Stay tuned. We'll be right back. Welcome back. Now, the Federation of Automobile Dealers Association has released its retail data for the month of February, and all the segments have seen negative growth on a year-on-year basis. We've been joined by CS Vigneshwar, who is the president of the FADA, who is joining us now. Mr. Vigneshwar, good afternoon. Thank you for joining in. What are you hearing from your retail, from your dealers when it comes to the retail performance for the month, Mr. Vigneshwar? Because even your survey for March is suggesting that almost half of them are expecting a decline, a flat performance, and even a decline on a year-on-year basis.
Thanks for having us over, Harmaz. You're right. Nearly 54%, which is a combination of flat and decline. They seem to be predicting not so great March, but let's see. There are an equal amount, more or less 50%, who also think that there could be a growth. So we're actually looking at it quite tepidly in terms of how things are going to pan out. There are some headwinds also there, definitely, but there are also some tailwinds like the festival season, like the Navaratri, the Guru Padwa, so Holi. All this could actually help us through. You also have the usual yearly depreciation benefits, where some customers will be seeking depreciation benefits. There are also great offers out there, so perhaps that could help out.
Mr. Vigneshwar, first of all, thank you so much for joining us. One point that you've mentioned, and that also was corroborated by Bajaj Auto, who was on a channel yesterday, was the fact that there is now limited access to finance. So could you elaborate on this particular point? Are lenders not able to give finance, or are borrowers at this point of time not eligible to receive finance as far as the lower end of the spectrum is concerned?
It's a bit of both. You have lenders who probably are facing certain delinquencies and increase in them. Therefore, they're also a little bit conservative in giving out loans. There are also facts that NBFCs, banks are asking for more time to process loans. They're asking for more documents, and the funding limits also have come down. So all these things are there. It's very important that liquidity is there in the system. I'm glad that RBI has been talking about increasing liquidity in the system. So this would probably help. We also probably need to work along with the OEMs and the banks and NBFCs so that we can have better access to funds for our customers.
Mr. Vigneshwar, the premium biking segment is doing fairly okay for itself, as was evident from Eicher Motors sales figures, but the entry-level bikes continue to struggle. And on the flip side, you're seeing that the rural markets are continuing to outperform when the urban markets. How do you read this dichotomy?
The urban market has been overshadowed by the rural market in the two-wheeler segment for at least the last few years. And we've been seeing that the drop in sales in February was starker in the urban sector. So we're also seeing that the rural sector has been doing decently well because usually marriages there would translate in gifting two-wheelers. Also, that the agriculture economy is doing decently well because of a good crop season. So they also have a little bit more discretionary spending out there. Urban markets probably is affected because the stock markets also haven't been doing great in the last 4 or 5 months. I've also seen that the SIP levels have been dropping. There are more people going out than coming in. So all these things probably has affected the urban market more.
Right. Mr. Vigneshwar, you've alluded to the fact that you're actually seeing, number one, some challenges that NBFCs are facing when it comes to timely processing of loans that they are asking from the banks. That is one point. The other point which we want to ask you is in terms of vehicle buyers, what are the challenges they are facing in terms of being eligible to access loans? And the second point is, one positive aspect that you've mentioned as far as the entire demand scenario is concerned is that the rural part of the puzzle is now doing better. But in the last couple of weeks, in multiple conferences, managements have actually spoken about the fact that they are now expecting, especially entry-level PVs as well as two-wheelers, to grow, not so much as far as FY26 is concerned. So where is the entire dichotomy coming?
First, the access to funds for customers. Right. This happens because when you look at vehicles being sold today, a large portion of the growth story is because of the funds available to them. Quicker availability of funds, a larger portion of the transaction being funded. So all these things are very important, and if that doesn't happen, liquidity is not there, the whole industry might end up suffering. When you look at the larger picture on how the markets have been doing, I think it's quite positive. When you look at it from the point of view that the marriage season is coming, and also from the point of view the economy seems to be going through a little bit of a glut, but at the same time there are offshoots. I mean, there are green shoots. When you look at it, I think I've been listening to your channel, and you've been talking about oil stocks and they are rebounding. Oil stocks also have a large impact on vehicle sales, and if oil stocks seem to be doing well, it's very good news for the automobile industry in general.
All right, Mr. Vigneshwar, thank you so much for sparing time, joining us today with your views on the industry. Wish you good luck for the year ahead as well. We take a short break. The Nifty now at 22,500 at the highest point of the day. We get you more on the markets on the other side. Stay tuned. Welcome back. And the stock that has been on the radar over the last 2 to 3 trading sessions has been Gensol Engineering, and we had an exclusive chat with the management of the company and we asked them about various subjects, the delay in the debt repayment, and of course the promoter pledge shares as well. Anmol Singh Jaggi, the chairman and managing director, answered all of these questions. Listen into an excerpt of that conversation.
Well, please respond to these, rating agencies, what they have put out. One is in terms of the debt servicing, the troubles on default, point number one. Point number two is they have reported on, false documents being provided as well. So please respond to both these two.
I would like to start by saying that I am a son of an army officer, and I am a very committed businessman and a person of high ethics. On the loan default that the ICRA and CARE have been mentioning, I want to mention that Gensol Engineering has always consistently been a profitable company. Our revenue in the first 9 months is more than 1,000 crores. We have grown by 40% year on year, and we faced on the very specific issue of delay in loan repayment. We faced a temporary liquidity mismatch while executing very large projects, which in turn led to a further enhanced working capital cycle. At the same time, while we had a minor delay in repayment of our debt service, we have repaid in the first 9 months of the year about 230 crores of debt, which has already been repaid in the first 9 months. We are committed, we are strong, and we will bounce back.
What we need to understand are a couple of things. One, you claim that this was due to a short-term liquidity mismatch, but ICRA and CARE explicitly state that there were delays in debt servicing confirmed by multiple lenders. So can you provide proof that no such delays occurred? And all the falsifying claims, a question that was asked by Nigel, ICRA suggests otherwise. So instead of setting up just a committee, why not disclose all the repayments that have been made to clear your name?
Yeah, so of course. First of all, I will go on the falsification of the document which is there. There has been zero wrongdoing as far as we are aware, and we will continue to work with high ethical standards. The committee has been formed so that this is independent and we can allege the allegation which has been made on us for document being wrongly provided, that can be independently verified. It is in the best corporate governance standards that independent committee does the audit of this rather than me or anybody else.
What about your shareholders? Because remember, the same time last year, the stock was close to around 1,000 rupees. Now it's down to about 335. 85.5% of promoters' stake is pledged. What we need to understand is at what price were those shares pledged? How much cover do you have before these pledged shares come into the market as well? And would you have to provide any more collateral?
Sure. So on the share pledge side, we have two kinds of share pledge, and we have done a full disclosure about it about 2 weeks back to the stock exchange. I personally, me and my family own about 2 crore shares approximately in Gensol Engineering, out of which about large portion of it is pledged with our lending institutions, which have given us term loans. And the other portion is with lenders who give money against shares. For the lenders who give loan against shares, we have already provided them additional collateral. And now the additional collateral that we have provided is not in the form of Gensol shares, is in the form of other collaterals that are family owned. So from that perspective, our loan against share lenders have adequately been covered and are fully supportive.
Despite all of these clarifications, the stock continues to remain in lower circuit, but the Nifty at 22,500 as we take your leave on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.